We have another biggie from Kotak joining us, our market master for the day, Sandeep Bhatia, Executive Director and Head of Sales at Kotak Institutional Equities. Good morning, Sandeep. Thank you very much for taking off time from the inauguration of your conference and sharing your thoughts with us. Well, first things first. Do you think the first setback to the NDA government, to Mr. Narendra Modi, in the form of the Delhi exit polls, will cast a deep gash? The markets have opened about a 0.75% lower, 0.8% lower. Is it just that a one-day worry for the markets?
Well, let's put the entire Delhi elections, and if we go by the exit polls, we have, AAP forming a majority government, which is a welcome development. I think again, the electorate has voted in voted in a majority government, which is always a good thing. We have BJP, who was the largest party in the previous elections. Now, a year later, coming in at second, maybe losing 4 to 5 seats from the last tally at worst, in the worst case situation. And so in the whole broader scheme of things of India's momentum, growth story, remember there are 70 assembly segments in the Delhi elections that we are contesting. There are over 4,200 assembly segments all over India. Right? So just to put this as perspective, it's 1.5% odd of the total assembly segments available in India, and therefore it cannot be a big setback. Yes, it's great if we have BJP winning each election after election, but we have seen that it is not possible. Even in Jammu Kashmir, they had a fantastic show, but they didn't take the majority, though they were aiming for the majority. Clearly in Delhi, it's a media-saturated assembly election, and therefore a good thing will be that we have a majority government, whoever forms the government, that is. I don't think it will derail the India story. Given the numbers which I just explained, it's like 1.5% of the assembly segments of this country. So I genuinely don't think that can derail or be a major setback for this market. If the market corrects, it is because the fact that we've gone through earnings season, that earnings season has not resulted in any major earnings upgrade. In fact, the consensus is that earnings will come through only at a later stage, which is why the markets may have a correction, and that's it.
Okay, Sandeep, hi, good morning. Point taken, so there might not be a big negative impact, but do you think Arun Jaitley could perhaps rewrite or rethink the budget speech? Because this time around, the electorate has voted for, things like secularism, subsidies, Swaraj, very different from what the electorate voted for way back, in May 2014. So do you expect these elections to have any bearing on, the budget speech, the political dynamics, hence?
I think if AAP wins, I would take this that the electorate has voted for accountable, clean, corruption-free administration. I think this is the same kind of vote that the overall national mandate also delivered, in addition to the fact that the nation at that also delivered an increase in performance. That was a national election. This is a state-level election. Therefore, the priorities of the electorate will change. If you look at the municipal election, then the priorities will be even more narrow. So let us not read such an overarching message in one assembly election as it changes the electoral mood. There is no doubt that if there are national elections held even today, BJP will come with a majority. So that goes without saying. So I wouldn't think that this is a major change in what the electorate is voting for. The electorate continues to vote for majority governments, governments which are more accountable, transparent, and governments which will act. And I don't think that is something which even AAP can walk away from. And in fact, we all know that the pressure is on whoever comes into power to be more accountable and to deliver on its promises.
Okay. Well, Sandeep, now to move to more broader issues. How would you expect the year to pan out? Are you, before we come to the year, are you even expecting a pre-budget rally yet again, the Nifty making a dash beyond 9,000?
There could be a pre-budget rally. You could have lots of hopes building up. I will caution everybody, and all media channels know this, that budget is just one day of the year. The economy operates all the 365 days of the year. Even on holidays, the economy is working. Policy decisions can be made as part of the budget and outside the budget. We have seen that this government is able to think out of the box. We have seen a lot of momentum in various spheres in which the central government operates. We have also seen ordinances in the economy side. We need to see if those ordinances become legislations eventually, and that we have a stable policy regime, which is what this government has been saying time and again, that we want to have a stable policy regime which is clear, transparent, so that decision making and doing business in India becomes easier, which is what this government has to deliver in its budget day and during the rest of the year. I think the real challenge will be for this market to go through this slack earnings period that we are going to witness over the next 6 months, and then see whether the momentum in GDP, which is what we require, the momentum in capital investments by corporates, the momentum in consumption by the households, whether all that comes through or not. As we heard Mr. Uday Kotak in his inaugural speech, we have to take the right policy decisions, and we don't need to chase growth. We need to do the right thing, and eventually growth will chase us. I don't think that narrative needs to change in the budget.
Okay. I was just going through, your key speakers at your conference, Sandeep, and apart from Uday Kotak, of course, there's Deepak Parekh, R.C. Bhargav, Baba Kalyani, Adi Godrej. In your interactions with India Inc., what's the sense you're getting about the capex cycle? Has there been any signs of a pickup there?
So this conference, the headline is Millennium Makers of India, and we have some of the biggest business houses, entrepreneurs coming through. We have like over 550 clients from India and from abroad, FIIs coming through. We have over 7,000 meetings. The entire who's who of corporate India is attending. This is really a monster of a conference with over 100 corporates coming through in the next 3 days. What I can say is that the capex cycle is still some way from seeing a revival. I think again, I think the markets, the media, and everyone thinks that whenever there is an RBI policy, if there's a rate cut, then there would be immediate impact in terms of capital investment. If there's a budget, then there would be something which will stimulate the economy immediately. I think the corporate sector continues to have a lot of faith, and clearly the decision making on capex will happen when there's demand revival, which is why I think Mr. Kotak alluded to the fact that we have to see, and something which I've also mentioned in my previous interactions on this channel, that we have to see whether the government can do something to stimulate demand and GDP growth, and whether public spending can do that. And that's something which needs to be seen, and that is the one thing which I'll see in this budget, rather than any other major factor, because clearly, other than some small tax concessions, maybe to individuals, or some kind of simplification for corporates, no major tax incentives can be given. We just want to see India do the right things and benefit from the benign macroeconomic situation that we find ourselves in.
Okay, Sandeep, I was just reading your strategy report, the one that came earlier in February, and you all are speaking about the gap between valuations and performance. Is there anything that you would shed at this point in time because valuations are too rich?
There are two aspects of valuations. One is the cost of capital, and the second part is earnings growth. And on a very simplistic basis, I don't want to go into the technicalities. A falling cost of capital helps higher multiples. Rising and faster earnings growth helps PE multiples. We have not seen higher earnings growth. We hope we will see higher earnings growth. What we have seen is falling cost of capital, and we also hope that longer term, India's cost of capital will be lower than what it has been, given the macroeconomic situation that India finds itself in, which is the only reason why multiples can go up. And if you look at that in the market, then probably there are pockets of overvaluation. There would be some overvaluation which we would see in consumer staples. If multiples are going over 45, 50 times, then it becomes expensive. Or there would be, some bits maybe on the tech side where there have been earnings impact because of the cross-currency movements. So there are bits of overvaluation in the market. The overall market is still not way too expensive to have a big sell-off.
Okay, by the way, the Sensex is now down 300 points. So we have seen further cuts in the last 10 minutes or so. And the market is really punishing, weak earnings reaction. So look at Apollo Tyres. It's now down 13% after a weak set of numbers. Sandeep, you have a lot of auto and auto ancillary companies that are attending your conference. And we've spoken about this sector in the past as well. But how do you approach some of these ancillary makers like Apollo Tyres that have run up far ahead of their earnings performance?
So I would think that, if we don't see a big auto rebound, we are hoping for that to come through by the second half of this year. So from October, December onwards, if we don't see that, most of these valuations and earnings will start correcting. And it's clearly something which we don't build in. We do expect that interest rates will be lower. We do expect that the consumption cycle will be stronger 6 months down the road. Right now, I'm not saying that sell out, but yes, if these risks do, as you mentioned, do come through, then some of these tire companies or even some of the ancillary companies would see major cuts of maybe 15 to 20% in their prices.
How are you looking at the year ahead, Sandeep? The overall impression is that dips would be bought to buy. Dips would be bought. What kind of gains can you look ahead to, say, in the next 12 months?
See, the next 12 months will be in two parts. Logically, we will be reacting to earnings in the first half. From April to September, we will be reacting to earnings and market should be range bound. Then the second part will be the crucial part here, Latha, and here it is either delivery of earnings expectations or a disappointment of earnings expectations that we'll witness in the fourth quarter of the calendar year. So October to December will be a crucial period. Also remember, there would be just one more state elections, which is in the state of Bihar, somewhere in the end of October, if the schedules of elections are held on time. Probably that election will go BJP's way, and we will see what happens. In the run-up to that election, the politics will also be interesting to watch. I think that this market will have muted returns in the foreseeable next 6 months. Not more than 10 to 12%. This has become a typical India market where India is basically a stock picker's delight, a challenge to a broader, index-heavy investor. So if you are looking at just index gains, these may be difficult to come by. India is in a situation, and India benefits the most when the rest of the world looks okay, but not great, and India looks better, which is the situation we have found ourselves for the last 1 year or so, that the world looks okay to slightly weak, while India looks better. If the world takes a big hit during this year, then we will also come off with it. Okay, but the good thing will be that we will probably come off much lower than the rest of the world, and commodity prices will continue to remain weak. And if commodity cycle changes and goes to a more elevated levels than we are at, maybe it won't go back to the highs of which we saw a year or 2 years ago, but from here on slightly more. I think it's a better situation for India to be in. India can take some slightly higher commodity prices, but the broader world macroeconomy should hold up. And that would be a better situation to be in. If that happens, then India would probably see double-digit returns coming through of 18 to 20% by the end of this year. So I think the global macro and India's own growth revival path will converge probably in the second half around September, October.
Okay, Sandeep, we'll leave it at that. Thank you, and you have a great conference. We hope to hear from you soon again on the takeaways from there. But thanks for that.